Looking for startup funding in Irvine? By watching this video you will learn how you can get unsecured personal and business funding up to $350,000. This is a personal credit-driven product which requires at least one guarantor to have 660 plus credit. Enjoy 0% interest rates for up to 21 months. Fast approvals and quick turnaround. Startup funding is a loan type geared towards helping you finance your business with very little history. Startup funding comes in many shapes and sizes, ranging from business credit cards, personal loans and lines of credit. However, even less traditional lenders like friends or family could constitute as a startup loan if the money were to be put towards a business. Types of startup loans and which ones are best for you. For entrepreneurs like you, there are a few types of startup loans. The main three are business credit cards, personal loans and lines of credit, and BDRA using your retirement funds. To help you out, we'll briefly explain what each of them does. Business credit cards. The application process for business credit cards is similar to that of a standard credit card. Business credit card applications are typically much easier than other business loans. The business credit cards themselves can be used for a wide variety of purchases and are a good way to keep business and personal credit separate. However, with all of the benefits, this means business credit cards often have higher interest rates than other loans. Business credit cards can give upwards of $25,000 to $150,000. Personal loans and lines of credit. Personal loans and lines are finances borrowed from banks, alternative lenders, or credit unions with fixed terms and rates. Much like any other loan, you pay the money back in monthly intervals at a set interest rate. The majority of personal loans are unsecured, meaning there is no collateral involved. We also have options where the funds are structured as a revolving line of credit as well. Business-Directed Retirement Accounts (BDRA). A business-directed retirement account (BDRA) is a deposit account, not a loan, in which a fixed sum of money is given and where your retirement annuities can be withdrawn. Specifically, a BDRA allows you to invest your retirement assets directly into your new business without any penalties of taxable distributions. Who qualifies for startup funding? The 3 C's. When you're looking into loans, Finance Factory looks at the 3 C's: credit, cash flow, and collateral. You'll want to have a credit score between 600 and 800 with an ideal score of 680 plus. But we'll also look for a minimum account balance of $1,000 to $5,000 for monthly cash flow, but also look at tax returns, profit, and annual revenue. As for collateral, we prioritize unsecured funding. However, collateral is just one option. As long as you have one of the 3 C's, you can qualify for funding. It's important to understand that businesses younger than 2 years or guarantors with poor credit scores will have a harder time qualifying. SBA lenders need to know you're reliable and not a risk. How to apply? Click on the pre-qualification link in the description box below. Thanks for watching this video.